I've just answered this sample question from the FLK1 sample question bank that the SRA have published on their website. If you'd like to see how I got to the right answer and why I got there, stay tuned for the next instalment on SQE TV.
If you wanna be solicitors, why don't you come and visit us at SQE TV?
Just a few reflections before we look at the question in detail. You'll just see an outline when you scan the question that this is an example of a two-tier multiple choice question, single best answer, where you're asked to come up with two answers basically as part of your choice when you're looking at the selections. The first one is a binary yes or no, is this statement correct? And then you've got to work out, is the reason stated for that answer the correct reason? So two parts to each of the answers. Let's see how we got on.
SQE TV.
Just to remind you, you have 1 minute 42 seconds on average per multiple choice question on FLK1, and because this question was quite lengthy and did involve a calculation, it did take me most of that time. I would say pretty much spot on 1 minute 40, 1 minute 42, something like that on the dot. So yeah, there are some questions that even an experienced lecturer like me will need every second that the paper allows. So looking at the question, what did it say? The directors of a private limited company plan to sell some land which is owned by the company. The proposed purchase of the land is known to all the directors and is the father of one of the directors. The company's directors are also shareholders in the company. Now, what I'm thinking here is that this is possibly, it could be a sale as an undervalue, it could be a sale to a connected person. So I'm thinking on those sort of lines. I'm thinking, yeah, this is definitely a business law, company law type of question. So what's the next part of the question telling us in the background? It says the land has recently been independently valued at £70,000 and it's agreed that this will be the sale price. The company's most recent set of annual accounts states net profits of £770,000 and net assets of £600,000. The company has adopted the Companies Model Articles Regulations 2008 unamended as its Articles of Association. And the question is, does the proposed sale of land require shareholder approval? Now, I remember, because I've assessed questions on very, very similar fact patterns before, that this is all about a substantial property transaction where you've got a non-cash asset. And in certain circumstances, those types of transactions don't need shareholder consent, but also in other types they do. So we have to work out and apply the relevant rule to work out whether or not shareholder approval was required. And there are some rules in relation to this. You know that it's not a substantial property transaction if the value of the land concerned here was less than £5,000. Well, that wasn't the case. It was worth £70,000. And we know from the rules, and we'll give you the citations a little bit later on in the video, we know from the Companies Act that any transaction of over £100,000 will require the consent of the shareholders, because that will be deemed to be a substantial property transaction. But what about this one? Because the land was being sold for £70,000, so that's between £5,000 and £100,000. So what's the rule there? Well, the key thing is for sales to connected persons for non-cash assets between £5,000 and £100,000, they require shareholders' consent if the value of the land in this case was more than 10% of the company's net assets. And in the fact pattern, there were certain clues given that you could identify and do a calculation as to whether or not we fell above or below that 10% threshold. So let's have a look and remind ourselves of some of the key facts here. And some of the key facts were, obviously, the land was owned by the company, so that was a non-cash asset. We were told it was being sold to the father of one of the directors, so clearly that prompted us to think, well, this is the area of law we're dealing with. The land had had a valuation of £70,000 recently, and we were told critically that the net current assets, or the current assets of the company, were £600,000. Interestingly, there was a distractor there telling you that the net profits were £770,000, and if you'd calculated in relation to that figure, you would have got to the wrong answer. So it's really important that we understood precisely which figures to be calculating. So whether or not this was a substantial property transaction involved you in doing a calculation, in this case, of working out what proportion £70,000 was in relation to the net asset value of £600,000. So what you needed to do was Do £70,000, divide that by £600,000, and you would have seen in percentage terms that comes to 11.66 recurring, so almost 12%. So clearly above that 10% threshold, and therefore because the value of the land was more than 10% of the net assets of the company, then shareholder consent was required. And therefore it was quite easy to get to answer D once we'd done the calculation, because that was the only one that made any sense. And as I mentioned at the beginning of this video, this is very much a binary question in two parts. Yes or no, was shareholder consent required? Well, there were only two options there, D and E, that said yes. So in the end, you were choosing between D and E, and D really explained what the law was that we've just applied. E was wrong because the fact that the company's directors are also shareholders of the company really isn't relevant to the fact pattern or the area of law concerned here. Obviously, A, B and C were all wrong because the wrong binary answer of no was selected at the beginning. But just to be clear, A was also wrong because A was too broad brush, didn't cope with all the exceptions there are. And option B is also wrong because we know that certain non-cash assets, in terms of their value, will require shareholders' consent if they're above that 10% threshold, if they fall within that bracket, as this transaction did, between £5,000 and £100,000 in terms of the value of the asset concerned. C was wrong because the fact that it's a sale at market value was not a reason not to require shareholders' approval for the reasons we've said.
SQETV.
Remember, I promised you earlier that I would share with you the parts of the Companies Act that relate to this particular fact pattern. Well, here they are. First of all, sections 190 and 191 of the Companies Act 2006. That deals with substantial property transactions where we got non-cash assets that would be relevant on this particular fact pattern. And because this was a sale to a connected person, you needed to look at sections 252 and then 253 that set out whether or not a particular type of relative was a connected person. And putting all that together, you should have been able to work out that this was a sale to connected persons because it was a sale to a father of a director, as we mentioned earlier. As we always do with videos when we showcase MCQ sample questions, we give you some of the variants that could come up in alternative fact patterns. And I would say that this particular type of fact pattern is really good for an MCQ, clearly we've seen it here, but also could be really quite a good question to set for SQE2, where you're given some background information, but you're, say, interviewing a client to get the balance of the instructions from the client in order to advise whether or not shareholder consent is required. So it could go either way for SQE1 or SQE2. So what are the variants you could come across? Well, in the fact pattern here, there were no changes to the model articles. Always a good question to ask a client, particularly if it's a client interview scenario for SQE2, because any changes to the model articles would effectively supersede or could override the provisions we've just looked at in the Companies Act. So the shareholders might decide to change the threshold when consent of shareholders is required, for example. Remember, the value of the transaction is quite critical here, and therefore the fact pattern could be different in the scenario you get in your assessment, either in SQE1 or SQE2, where the amount concerned of the non-cash asset is less than £5,000, in which case no consent would be required. If it's more than £100,000, you know definitely consent will be required. If you don't know the amount, you're going to have to ask the client that in a client interview situation. Other variants could involve the sale to a person who's not a connected person. Also, when it comes to the fact pattern, you could get something where the numbers fall differently, where you don't reach the threshold of 10% of the company's net assets. Or it might be that the person is not connected to a director, but might be connected to a shareholder. How would that vary the conclusions you reach? So these are all questions that you need to be prepared for, not just the one that you've seen in this sample question.
SQETV.
Well, if you like this video, please don't forget to tap the notification bell to subscribe to our channel. We love it when you do. It helps us improve our rating on the algorithm that YouTube have out there. And please do like and subscribe. It helps us also in that regard. If you enjoyed this video, remember there are plenty of other videos that look at MCQ practice in various different guises. Make sure you clock on to those because they will really help you look at how you analyse multiple choice questions, but also give you some practice at once if you've not seen any of the sample questions before on the SRA's website. Thanks very much for watching. Until next time, here's the jingle.
If you wanna be solicitors, why don't you come and visit us at SQE